Hi, this is Anthony. Welcome back to my show. As always, besides my request that you hit the subscribe button, remember I'm not a financial advisor. This is not financial advice, just some financial entertainment that I hope will prompt you to do your own research into what is appropriate for your own situation. And while in this video, which I hope to keep short, I'll talk about some ideas for stocks to put on your radar that might be interesting for you to consider. I'm assuming that most viewers are going to be people who have $1,000 of disposable cash to put into the stock market. If, however, you do not have an emergency fund of cash in a bank account, or you have balances on high-interest credit cards, it's probably more prudent to put your $1,000 towards paying them down and saving the 25 to 30% interest that you may be paying, rather than putting it in the stock market, where if you're lucky this year, you might make between 8 and 20%, depending on what you put into it. So obviously, some of the easy ideas would be to put the money into broad-based funds that track the market, such as stock symbol DIA, SPY, and QQQM. These represent the Dow Jones Industrial Average 30, the S&P 500, and the NASDAQ 100. I think most people will agree that long run you won't do too badly with these. Although in the case of the NASDAQ 100, there could be long periods of time where if you buy at the top of a bubble until the index gets back up to where you bought in, which argues against putting all your eggs in one basket. Here are some year-to-date charts for these, and year-to-date they're all positive, at least slightly, and some of them have done quite well. And here's some longer-term charts. If you're interested in diversifying across these three funds, you could buy one share of DIA, one share of SPY, and 2 shares of QQQM, which would at this time cost about $1,013. When I put $1,000 in as an additional contribution to my Roth IRA a few months ago, I was able to do just what I described, but buy 3 shares of QQQM with a little extra money left over for a few shares of other low-priced stocks. So, in the long term, what I've outlined is probably going to be a fairly safe investment. A couple more ideas to put on your radar at this point. I've mentioned in a couple of videos what I consider to be a very boring stock with an exciting history of returns. That is Church & Dwight. You know them from their Arm & Hammer baking soda, and they make a whole bunch of other things. Do your own research, and I don't know how much this is going to grow more this year. It's already up about 8% year to date. A few weeks ago, it was up about 10% on the year. But it's been around for probably over 170 years. And as you can see from this long-term chart that goes back to 1983, 36 cents invested in the company would have grown nearly 24,500% to $88.54 today. And it does pay a small dividend of 1.23% based on Friday's closing price. If you're looking for more speculative stocks, check out Palantir, Double Verify, and Symbiotic. On each of these, I've done one or more videos about, but in the course, or of course, do your own research. Just use me as a starting point. Okay, I want to keep it short today, and as always, I'm not shorting any stocks. I may hold some shares of stocks in videos that I talk about, but I always disclose that. In the case of the things that I mentioned today, I own shares in all that I've mentioned in my Roth account, and I have some Palantir in my regular stock account. So ultimately, what do you think? Do you own any of these? If so, how many shares do you have, and how much have you gained or lost so far? Are you thinking of purchasing shares now that you've heard about these companies and funds? As always, please do hit that subscribe button, click the like button, and leave a comment. I really want to hear from you, and I read all of your comments eventually. Keep an eye out for my other videos on stocks to keep on the radar, as well as those to avoid like the plague. This has been the Anthony R.R. Mills Show. Thanks again.